if I've got them in my portfolio. Performance. As I do.
Hey, Andrew. Earl, Felicia.
There we go. And I'll share my screen. So this is our Western Digital Iron Condor, and as we can see, it's doing everything that it should be. It's remaining nice and range bound, hanging out here between 43 and 50, which is good. Theta is working for us. We're now pushing into profit. We've yielded 5.6% of our maximum 16%. If we come down the bottom here, we can see we've still got a much greater probability of profit from when we've opened the trade, because Theta's now passed, the trade is progressing, we're at 78%. IV, it's a little bit all over the place, coming down a bit, but nevertheless, the trade's in really good shape. So at this point in time, I'm going to leave that where it stands.
Hey, Matt, can you put that back up for a second? I want to point something out.
Of course.
We talked about this last week when we were in the hedge fund coaching class. Here's the thing to know about credit spreads. When the short, and let's look at the 35 short put there. So we sold that for 44 cents. It's currently worth 30 cents, let's call it. So we've made 14 cents on that. When the value of your short puts drops to sub 5 cents, then those puts have done their work. And what you want to be on the lookout for as possible adjustments is when the short option gets close to zero, the value erodes. Here's the thing. Once the value of your short put drops to a few pennies, that's as much as the trade can contribute in addition. That's terrible English, I know. But once the put is almost worth it, that option has done its work. It can only hurt you from there. So for example, if this put was worth 1 cent right now, it's not, but if it was, then why would you hold on to it? It doesn't make sense, because if the stock were to tank for some reason, then you would lose money on that short put. So basically the adjustment you want to think about, and you can just shut them down, or you can adjust. You can sell more premium closer. But when your short puts, the value of your short puts approaches zero, get rid of them. Close down your worthless short options. Leave, though, your worthless long options. Why would you sell a 30 put for 1 cent? What's the point? So, for example, if your 30 put dropped in value to 1 cent, the long put, there's no need to sell it. It's like a lotto ticket. So think of that. This is actually 4 different trades. And their Matt's taken.
Look like.
Yeah. No, it's not time yet, but that's the idea.
Correct. Yeah.
And then you have max profit. You have unlimited profit all the way to zero. You make more money if the stock drops.
I shall just undo that. Okay. Thanks, Mike.
Yeah, you're welcome, buddy.
So this here is our United Health Iron Condor, and as we can see, it's remaining beautifully range bound up around the 540, 545, trickling sideways, doing exactly what we want it to. And again, just making the most of these credit spreads that we've got on here. Theta's working for us. IV's remaining relatively stable. Again, nothing else for me to do in this trade here, and just let it trickle on. If for whatever reason United Health was to make a run, either bullish or bearish, then we would look at adjusting as per the rules, whether it be contracting and then hedging off one side, or buying one of our shorts back. But at the moment, we're in good stead with United Health as well.
And it's at resistance too. It's at resistance at 555 or 550. So we're at a key point. And so far, let's see, what GM pre-market is at 545. So it's coming down. It's down about 4 points to open. So that resistance is looking for us at the moment anyway.
Yep.
Matt, I've got a question.
Yeah, Johnny.
Were these iron condors from a scan? And
No. So these are iron condors that I picked out of the credit scanner, and then I had a look at where can I get a way where can I get the risk away from the trade? So I used the standard scanner, and then I said, right, how far away from the money can I get? And then where can I sell underneath? So for example, with Apache, I can't remember what came out of the scanner, but this is one that we spoke about a few weeks ago. And it was actually built as it came out as a Montador, and then I modified it to be an iron condor because I had to sell 2 of the put spread down below. And that's how we ended up with the iron condor. And what I try and do with these, and what I'll show you in 2 of the trades that I've got to share a little bit later on, is I'm trying to sell either above a key support and resistance level, whether it be the 50 or the 200, price, prior pivot high, or standard deviation. So that way I can manage the risk and get as many points of resistance or support, either up or down, on either side. And that's how I ended up building this one.
Yeah, another sort of more systematic way, rules-based way to do it is you run a scanner, Johnny, you find a bear call or a bull put, and it's a certain number of points away from the stock price. So in this particular case, on 8.5, can we go to 8.5 here, Matt?
Yep.
Let's take a look at the trade when you put it on. You know, the way I teach it is, when you run the scanner were to come out with a 45-50 bear call spread, for example. And on the day, the 45 short call is what, 14, let's call it 14 points away from the stock at 31.75. And so then the one simple way to construct the iron condor is to simply sell the puts the same distance underneath that the calls are above. And then you create a balanced, equidistant iron condor. This is the basic way to do it. And then Matt's thrown in some extra tweaks. But that's really the main process. Now I did last week, I don't know if it was last week or the week before, but I showed you how I posted these settings in the WhatsApp thread, using the iron condor scanner. And the settings are in the thread, and if you go back, just look through them and look for my post, you'll see it's just the regular condor, the third down there. And there's wizard settings that will go out and find these these wide iron condors. Now they're not default, so you have to build it. And I've given you the settings in the thread. Yeah.
Cool. Thanks, Mike. And Apache,
Yeah,
same story, everybody. Just sitting, letting it ride, and currently working for us. Back to you, Mr. Wade.
All right, man. Thank you. All right. What time is it? Is it almost time for we got 4 minutes. Okay. What else? Let's see. We got a chat question here. Andrew, based on that idea, I closed a few credit spread short legs last week and let the rest expire. Yeah, lost a little income. Yeah, you're going to lose a little bit. You're going to pay for buying those puts back or calls. It was barely worth the trading fee, was able to buy back the short puts for 5 cents market. So I like that concept, even if expiring, because then I'm done, can continue to be on vacation. Okay, good. Yeah, it's valuable. And then, you know, when you get into any strategy, if your short options are worthless, why do you hold on to them? They're not they can only hurt you. Okay, let's see. Let me share I am sharing my screen. Okay, let me just go through here quickly, see if there's anything else. Bitto, this bear call, did I talk about this one? I did. But this one's going to be in good shape to start. Currently the position, yeah, we're going to take this off probably today. So we'll see what that is at the open. So here's what I'm going to do. So again, if some of you just joined, first thing I did this morning was check out CNBC. What's up? AMC tanks more than 30% as Regal Cinema's owner warns of bankruptcy. So now what we don't have is the ability to run a live scan for AMC bear call spreads until 10 o'clock Eastern time. And so here's what I'm going to do. I'm going to go into get some live quotes. So we're going to trade this live, and I'm gonna go to trade and turn on this. Now, I know not everybody has Thinkorswim, but I do, and that's good because we're gonna be able to snipe some high premium, high IV this morning in the first half hour of the day. And so while I'm looking at this, I've got this already teed up. We're going to see what the bid-ask spreads are. The slippage might be wide, so we'll deal with that if it is. And so I'm looking at the chart. The stock will open at roughly 11:30. So way the heck down here. So then the question becomes, how close to the heat do I want to get? And how much time do I want to sell? So I'm thinking there's two things that I'd like to consider. One would be to sell a long-term credit spread at maybe 27.50, maybe a bit lower. So I'm going to be looking for long-term, and then I'm going to be looking for short-term, maybe even options that expire in 4 days on Friday. When you catch them on the day they open after news like that, the IV is going to be elevated like nobody's business. And we might be able to come in here and sell a 15 call spread or a 1250 call spread that expires on Friday. So this is like the, woo, we're off.
And they're off.
This we get to do, this is literally playing a game, and we get to make money if we play it well. It's just like, man, sometimes I pinch myself like, is this how I'm deriving my living? Yes, it is. It sure is. Here's AMC right down here at 1140. Lovely, lovely, lovely. Okay. So let's just see what's available premium wise. The slippage is probably going to be quite wide, and that's not quite open yet. I don't see any volume yet, but let's give it a little time to open up. Might take a minute or two, maybe longer, given all the fray that's going on. So bear call, maybe at 18, short term, maybe 14 if you want to get aggressive. This is bad news, by the way. When the owner comes out and warns of a potential bankruptcy, you know that it's probably quite imminent. That they wouldn't say that unless it was, going to happen. I wouldn't think so. Also, stocks making the biggest move in the pre-market: Signify Health, Bed Bath and Beyond, AMC. All right. So the issue that we have now is the slippage. Let's see if it's open yet. Are we getting any volume? I'm gonna check this out here. Oh, the slippage, the pre-market slippage is not bad. 660 by 685 on the Friday options. So they're not quite open yet. There's been no buying and selling. Market makers are holding firm. They're waiting for a little stability before they open the market. So we got to wait a little bit to see what the prices are going to be. Let's go back to vertical really quickly here. So how close do we want to get? And this is a game you get to decide, right? How close to the heat do you want to get? Now, some might say, I think 12 is good. You could even do a butterfly on this thing, a regular butterfly. That's another thing we could check out. I don't know where the stock's going to go tomorrow, though. That's the thing. The other thing to also remember is when a company like AMC, which is a big movie theater chain in the US, is that they could be a buyout opportunity as well. So that's also something else to keep in mind. I wouldn't expect there to be a buyout offer for the next week or so at least. So I would say we'd have a pretty good chance of not dealing with that over the near term future. So you might feel good about selling at 14. So I'm just waiting to see. Hold on a sec here. Waiting for the prices to open up here. Nothing yet. And it might be, it could be 30 minutes before they open the market. So we've got to wait a little bit before we can play with that one. I'll come back in a few minutes. What else do we have? Signify Health, Bed Bath and Beyond. Let's check Bed Bath and Beyond real quick. Bed Bath and Beyond. This is one of these meme stocks, and so you got to be careful. I don't like to trade meme stocks, and last week we talked about how to find them. They're in the Reddit community. If you go to the Reddit website, and also if you just read the news, you'll see them referred to as meme stocks all the time. But yeah, I'm not interested in this one because if the Reddit community comes back in and pops it back up, you've got to be really careful. So stay away from meme stocks. It's just too much risk. There's too much unknown. Signify Health. Let's see. I don't know the symbol for Signify, so I'm just going to type it in here. Signify. Signify Health, SGFY. Okay. So they're up big. Why? Amazon and United Health are fighting over a health company you've never heard of. Okay, they might be, it looks like Amazon and United Health might be buying or wanting to buy Signify. What do you do with those? Nothing. Imagine that, and this happens, think of Tesla when Elon Musk wanted to buy Twitter. What happened there? Well, first off, Elon Musk isn't the most stable individual in the world. Elon Musk says, I'm buying Twitter. No, I'm not. Boom. So on news like that, buyout candidates, it's just not a good idea, in my opinion, to mess with them, because any piece of news can move the stock solidly against you. Hey, Matt, given that I'm waiting for AMC to open up here, would you like to talk about the two trades you're looking at for today?
Yeah, sure. I will share this screen and I will start with this. So this is Delta Airlines. And I came across this to Johnny's point earlier on. I came across this in the scanner, just looking at call credit spreads. And then I've played with it a little bit to get it into an iron condor that I like. Now, with Delta Airlines, let me just grab a chart on it. At the moment, airlines are generally trading lower to flat based on their recent poor performance, recent customer experience. They're not in a very favorable position. That was the sort of news supporting it. But when I go and look at a chart of Delta, and I was looking at this trade, I was quite pleased to see. Now, for those of you that are in AusPac, I'm using Interactive Brokers, and Mike will be using Thinkorswim. So when you look at this, you can actually see that it trades in a very nice, tight 2.5 to 5 point range. Whilst it does have a support, well, today it's gapped down, but it had support on the 50. It still has resistance at the 200, just above it. And I built this beautiful little trade. 19% return on risk, $167 risk per contract, with 75% probability of profit. So I've positioned this and built it, as I was saying before, so that my risk is a number of levels away from the current price action. So as of today, we now have the 50 and the 200 acting as resistance to the upside, assuming Delta stays under the 50-day moving average on the close today. And the options are also still on the short side, outside of the standard deviation, the first standard deviation. So this here, I like as a nice little trade, and I've got it sitting there. Yes.
Matt, why did you walk them through how you picked the 25 put? We want to make sure they can replicate your logic here. What had you pick the 25 put?
Oh, good question. So down the bottom, I was actually looking again at support and resistance. So I came down, let me show you, hang on. I'll show you on here because I'll probably, not to confuse you all, but I just find the charting in Thinkorswim so much nicer than Interactive Brokers, I have to be honest. So 25, right down the bottom, the lowest low was 28.10. So I was then looking at what is a round number and how far away can I get, but still bringing in enough premium to make the trade viable. And seeing how this stock is so range bound in $2.50 sort of ranges, that's how I ended up at 25. Lowest low at 28.10. I didn't want to sell around 27 because it's too close to the heat at this lowest low. So I backed it out a bit. and came down to 25. It's a round number. It's in the headers a round number of institutions. So it will hold material weight in its support. And it's also never been touched ever since, well, back in September last year. That's why I picked 25.
Okay. The other thing you'll notice is that the 25 put is about the same numbers of points away from the stock price as is 40. So that's another simple way to pick your strikes is, you know, so you see there, the 40 call is what, 17 points away. And the 25 put is what, 7? Let's see, I can't, yeah, 7. So
yeah.
yeah, so it's a little closer. The other thing I'd point out here is, Matt, if you check the news for today, this might be a case where we leg in because we sell the call spread to start. Check the news. If you could show them the news, you'll see Delta. Would you mind? Yeah, there you go. If you check that top item there in the news to the left. There you go.
Yeah.
Airlines are trading lower. It's not, there we go. Got it now. And so all airline companies now are trading lower as markets assess economic health, Fed policy outlook, which could impact consumer spending and affect travel demand. So that has me a little nervous about the underlying put, but I think now if the airline sector and Delta with it continue to drop a bit, then if we could wait, here's what I'm trying to say. We could wait until the stock stops dropping and then sell the put spread. I think the call spread is a no-brainer. The put spread, though, with the stock dropping, if the stock keeps dropping, that put spread is going to lose us some money, at least temporarily. And then we wait until this Delta drops a bit more. I don't know how far we wait for the thing to stop dropping, look for some bouncing of some sort, hitting support, bouncing, and then sell the puts later for more money.
Maybe
that's what I would do.
30. Yep. So what Mike's saying, everybody, is if I just duplicate this and we simply remove the lower put spread, wait for the price action to take hold over the next couple of days, and then come in and sell the puts underneath and yield some more premium, which would leave us with this trade. And then by legging in, rather than taking the whole trade in one go as an iron condor with your 4 legs, you do your call credit spread first. And then in a couple of days' time, you leg in or you sell the other put credit spread underneath, then creating your iron condor.
Yeah. I like it. I like that better, I think. I like the iron condors, of course, but let's go get this one, man. Let's
do it. Done. Okay, I'll do this. Do you want to grab something else while I get this order placed, and then we'll come back and have a look at?
No, I want them to see you do it. I want them to see you do the order so they can. Sure. I'd like for them to watch you do it. Now, how much are the 42 call spreads going to be worth? We don't know.
Oh, we'll find out in a minute.
Yeah, this is Friday's data.
Move this out of the way. Okay, so this is Interactive Brokers, and for those of you that are or are not familiar with it, it can be a bit of a beast to get your head around. I'm in the process of building. You can use template files to actually build a profile. So I'm in the process of doing that. I'm just having a few issues with it, so I will endeavor to share that as soon as I can. So if I look here, let me just get rid of this. If I look here, we have October 21, 40.42. So we go here into our option chain, October 21, regular expiration, turn on your strategy builder, and you can come down here and select vertical spread. And what we want is, if we scroll down the chain here, we want to sell the 40 and buy the 42. Where is my market data? That's a bit of an issue. That's all right. I'll put it in as a limit order. 20. Mike, are you able just to check the price on this for us at the moment? My market data is not.
Yeah, let's see what Toss says about it. One sec.
Yeah, thanks.
What's the expiration date again?
October 21, 40.42.
Okay. Let's see. It's going for, looks like it's going for 12 cents at the moment.
Then, which means that's almost half. So I'll double this up because that'll still give us enough in our risk profile. So quantity of 2. Now, I can talk through this other order entry panel down here at another time, but this is where you can start doing some funky stuff with your orders. But fundamentally in your strategy builder, you can place your order, bringing in $24 credit, 12 cents, and transmit. Cool. And that's it. And we'll just wait. Here it is here. Delta Airlines, bear call spread, 12 cents. We'll see if we get a fill.
Yeah, can you reflect the 12 cents in the risk graph so we can see the
Certainly can.
P&L and all that stuff?
Sure. I'll just do it crudely for now.
We may want to drop the calls a little bit.
So that's where that leaves us.
Probably. It gives us 6%. And then with the condor underneath, once we sell the puts underneath, that would increase, of course. The other option here would be to drop the short calls to a place where, a resistance level of some sort, and then get a bit more premium. But because we're selling a put spread underneath it later, we're going to be able to at least over double that 6% later. So we might end up with like 15% once we iron condor it. So yeah, I would, in this case, I would lean towards the probability.
Look at that,
profit.
82%.
And that's going to be higher at 10 o'clock once the data gets reset, because the stock dropped quite a bit since
Absolutely.
Friday. So.
Terrific. And that was Delta.
Nice. Did you have another one?
I do. Exxon. So we all know that oil is in a little bit of trouble. And I came across Exxon as well in the scanner, and I found that it's rather range bound at the moment. Yes, it's had a bit of a bullish run, as we can see here, but at the moment with the downward pressure on oil, I pulled out a call credit spread out of the scanner. And again, I used exactly the same methodology to modify it, trying to get my risk as far away from the price action as possible. And I've been able to place it using, as we can see here, the strikes 110, 120, 70, 80, giving myself a little bit extra room. So if it starts going against me, I can contract that risk out. And I've got my short risk outside of our standard deviations. And if I bring up a chart, and again, I'll use Thinkorswim because the charting is much nicer on Thinkorswim. I can see here that we do have support down here at 90, and we do have support here at 80. So what that's going to do is that is protecting my put side. So where is my protection to my long side? I have a prior pivot high back here, which is start of June at just over 100. And the other big number that I have here is the 100 price support. Yes, I have 105 as well, but 100 is a material number, especially when it comes to any stock. So that in itself, I envisage is also going to provide support. Being short at 110, I'm above the prior high at 105. And given this is a 10-point moving stock, I have another level of resistance in front of me. So the downward pressure on oil coupled with material price resistance with prior pivot high price resistance, it's what's led me to build the iron condor for Exxon.
And your 80 put is below the 200-day average.
All the way down here, just below it.
Yeah. And what's Exxon doing right now?
Probability of profit, 72%, yielding 17% return on investment. You will notice because of the distance between these strikes, as there is 10 points between them, our risk profile on this trade, while we tend to keep everything to circa $500, just be aware that if you are looking at trading this in your simulated account, that this is profiled at 853. So just keep in mind, if your risk profile is a little more conservative, this may not be a trade that you wish to enter.
Good. Well, let's get we're tracking Phil. So let's if you like this one, I like it. I think it's good. Let's post it in the thread and get filled.
Do you want me
We
to
only
try and
track full prices here, guys and girls. Only thing that makes our tracking is stuff that gets filled. So let's get a live fill on this.
Yep, I
I got
will.
my eye on AMC while you're doing that.
Remind me again why AMC is not trading yet.
It should be.
Just because it's just lots of fray craziness, market makers. The volume is starting to kick in now. So
Okay, it's got trading hold.
yeah, exactly.
No,
I don't think it's a trading halt. I think the option market makers just, when things are like this, they sometimes will just wait 5 minutes or so before they open the options market.
Hi, I'm just waiting for your comment on the liquidity, on the spread prices on IMC.
Yeah, they're pretty high.
Yeah, I don't think
We'll
I've
come
seen
back
them
to
that high. Yep.
Yeah, we may have to wait.
Okay, I'm just posting those in the thread now for everybody. That's Exxon. And we will go and take on Delta. Mike, I've stopped sharing. You have the con.
Well, I'd like you to get them filled, brother.
Well, so would I.
Yeah, so go get filled, and then I'm gonna play with AMC. What I mean, show them how to get filled. I that's part of this is to do all the live stuff so people can learn.
Absolutely.
Interactive brokers. If you're trading interactive brokers, please raise your hand. I'd like to just see if anybody out there is trading IB. You can do that by going to reactions on the bottom and then raising your hand. I don't see anybody with IB. Glenn is okay. Awesome, Glenn. Yeah, I definitely, before we track anything, we want to make sure that we're getting filled. So that's what if we get filled, we'll track. So Matt.
Yep, I'm just logging back in. Give me 1 sec, because Interactive Brokers likes to also auto log you out. So here we go. Okay, can you see the logging in screen?
Yeah. I remember when I was coaching people in Australia, James, in fact, and he had Interactive Brokers, and I was trying to help him. And man, it takes a little bit to get it set up. And if you have templates, and Matt's going to share the templates, it makes it a lot easier.
Yeah.
Interactive Brokers is available in Australia and Europe and pretty much everywhere. So for those that don't have access to Thinkorswim, this is an option for you to trade the US markets. Matt, do they have a paper trading engine?
Yeah, this is it, what I'm using. But I don't understand my market data. Oh, here we go. Now I'm getting market data, because I wasn't getting it on that last order, which was just bizarre. So yes, they do have one. Frustratingly though, what they don't do is allow you to concurrently log into your live account and your paper trading account at the same time. So if you're someone like me that does a lot of simulated trading with a lot of live trading, you're constantly flipping between platforms, which is not ideal. Okay, Exxon. So we just start by typing the ticker in up the top here. And we will go to our standard expiration, October 21. Turn on the strategy builder if you want, or I can also show you how to actually build this with individual legs. Iron Condor, confirming short 110, long 120. So we'll come down here. 110, Iron Condor 110, and do 120. So selling 1, So this RT stands for ratio. October 21, 110, long the 120 on the put side, short 80, long 70, short 80, long 70. We had this in for $1.47, and this is there's something weird going on with the market data feed here. My apologies, everyone. Just let me build this in Thinkorswim quickly because it's definitely not doing what it should be doing. So for those of you that use Thinkorswim, I'll show you how to build it in here as well. So October 21, and we want to sell 110, 120 call. So selling 110 on the call, buying 120, selling on the put side 80, buying 70, all the way down here, buying 70. So short 110, long 120, short 80, long 70, $1.43 on the mid, day only order. Confirming 853 on the wrist, 59. It's moved a little bit. $1.41. That's why. That's right. We'll send it in and Thinkorswim. It's like a battle of the fill, Mike. There we go. Filled on Thinkorswim for $1.43. Let's go and put IB through its paces. $1.43. Yeah, I'll have to work out what's going on with my see, even the bid and the ask in here, there's something wrong with the data feed, so I apologize, everybody. I will work on finding out why that is the case. So anyway, we've got that one in, and
Matt, I think you're the wrong way around on your credit spread, put credit spread on your IB account. You're showing you're buying your 80 and selling the 70, but you should be the other way around.
my apologies. Thank you so much.
Easy to do.
Yeah. There you go.
That's why you really want to get used to your broker's platform and trade it in a simulated fashion if you have either IB or Thinkorswim. So is the price the same?
Yeah, here we go. Exxon 21, 110, on Condor, selling 110, buying 120, selling 110, buying 120, 70, 80. Yeah, selling the 80, buying the 70, selling the 110, buying the 120. There we go. $1.43. That's better. Thank you for that. There we go. On an active. Delete that one. And we got filled on Delta. Bought to open to 12 cents. For the commission of $1.60.
All right.
So I will update that in the trade tracker.
Awesome, man. Thank you.
Fabulous.
All
Thank
right.
you everyone for bearing with me with my with my broker woes.
Yeah. Yeah. Welcome to the world of teaching.
Yes. They say that technology is wonderful when it works.
Yeah. You got to think, you got to teach, you got to think about what you're teaching, and you got to make the software work all at the same time. Yeah. Good job, man. I like that. Let's take a look at AMC. The market is open. And as Robert was pointing out, the slippage is gargantuan. And that's because of the fray. What time? We got 2 minutes. I'm going to go ahead and kind of riff for a couple of minutes. And at 10 o'clock, in 2 minutes, we'll be able to get some live data, at least at the open. We'll get the live open data and we can kind of play around a bit. But here's the question. Let's just play a little bit. if I'm looking at this chart, now for me, a no-brainer trade would be to sell a 27.50 long-term call spread. Now the stock's already down at 12. It's kind of hanging out. Looks like it's doesn't want to keep dropping, so it's found a bit of a floor at 10. It's kind of hanging out. Looks like it might bounce a little bit. So then, if I want to go long term, I could start by looking to see what's there. So I could go to 21 October. That's 60 days. I've got December 16th. That's 116 days. I'd be more interested in 60 days than 100 and some days. And then I want to just see roughly what the mid price might be at 27.50 or 25 maybe. Let's just see what's there. So I've got 27.28. I've got 26.27. Slip it. The bid ask spread is crazy, right? 485 negative by 515. I'm not sure what percentage slippage that is, but it's, I think 1,000% or something. 100. Yeah, it's a lot. So it's showing 15 cents and now it's a debit. So we may have to wait a little bit. Let's widen our stripes a bit. So let's see. 27 by 30, giving $1.34. And the slippage is the natural is to pay 117 for this credit spread, or mid price $1.34. Now that's just so wide you don't want to mess with it. But here's the but. The slippage is wide. They're filling things because of the fray. It's a feeding frenzy right now. The slippage is going to be gargantuan. Not slippage is gargantuan, but also is the IV. You could get filled at a very nice price while slippage is temporarily widened because of the feeding frenzy. And then when things settle, which they will, the slippage will return to normal levels. So I'd be all right if I could get, a decent amount of credit selling at 27. Then I would take it. I would take it. Let's just see. So this is I got 3 points. I need to make that 29. Okay, so 20 cents mid. So that would be 20 cents credit on a 2-point spread. So what does that mean? It means 20 cents credit and $1.80 of risk. So I can quickly calculate the risk in my head. The distance between the strikes, 2 points, minus your credit is your risk. So we could make on this trade at, this 27.29 put spread, we could make 20 cents on $1.80 of risk. Now that doesn't sound like enough to me. I'm just going to use my calculator. That's whoa, what? I think it's 11. I think it's 11%. Hold on a second. So 20 cents divided by $1.80 is, it's 0.05%. So it's not worth it. I'm not interested in it, but now I do have market data. So let's go in and take a look and see what's there. I'm going to start with a chart of AMC stock charts. AMC. And let's take a look at the IV as well. So I got IV overlaid, update. How high is the IV? Yeah, nice. Nice. Wait a minute, that's not today's date. It's even higher. I was still on Friday's date. No, that is today's date. Okay, yeah, there we go. There it is. All right, yeah, the stock's down here. The IV didn't come up as much as I would have expected. I thought it might be up here, but the stock's down here. IV is elevated. Let's run a long-term credit spread search on this thing and see what the software would give us at the open. Long-term out of the money call credit spread search. And there isn't anything, probably because of slippage. Okay, so now we can start building some stuff. I'm going to go into option chains. What's happening? That's weird. Huh. I don't see any data. AMC, option chain. Huh. Let me just try to create a trade. We're missing some data. That's weird. We get
I
our
think
data.
they held up opening at 9:30, so maybe there wasn't anything to report.
Well, there's historic data on AMC.
Yes, yeah.
So I'm not sure there's no option date on AMC. I'm not sure what's up. I'll have to check in with the developers. We might have taken it off the board. There is option data. The data that we report in Tom's tools is what's reported from the third party. So without the ability to see risk graphs, personally, I trade credit spreads without risk graphs sometimes. But we could just take a quick look and see short term what's available, maybe at 1750. So I'm not going to place a trade on this unless I can see it in Tom's tools. I want to keep everybody safe. So
I
I
can
would
see it in Tom's.
What's that, bud?
I saw it in Tom. Well, maybe I have the wrong date. Forget it.
Well, maybe. Let me back it up. I'm going to check the news here in a minute. Let's go back to 21 or last Friday. Let's see, on the 19th, there is data. Okay, so there's no data today. Let me see if there's any news here on AMC. Have they halted trading or something? Let's see. Okay, shares resume trading, continue higher. So they did shut down trading, resume trading at 9:46.
Yeah.
Let's see. It is a meme stock too. So I mean, and we need to kind of stay away from meme stocks. But when the CEO comes out and says bankruptcy is a possibility, it's very unusual for a CEO to say that, unless it's true. I think we're going to have to sit on this one for a day or two and wait for things to normalize. I want some data in Tom's tools just to walk you through the
No,
process.
but Mike, to be clear, that's bankruptcy on Regal Cinema, not AMC.
Oh, do I have the wrong stock?
Well,
I think
Regal's is a London-based stock.
Okay, as Regal Cinema's owner warns of potential bankruptcy. Let's dig in and see what the news is here. Building a loss of more than 20. The drop comes. Rival Cineworld said on Monday is considering a new preferred share dividend from. Okay, all right. I need to know more about what's going on. Why the stock? It is a meme stock, so you got to be really. It's curious to me why AMC would drop so much. Regal Cinemas. I don't know. Can we trade that? Let's see.
No, it's CINE.L, which is, I guess, in the London Stock Exchange.
Yeah. Okay. All right. That news is a little shaky. I totally misread it. I got excited. I love when this happens. So given it's a meme stock, I'm going to say let's hold. I like it as a case study. And so let's just go through it as a case study, just for fun. It's got wide slippage. What can we do with it? If this was the company that was going bankrupt potentially, then I'd be like, man, probably not much of a chance the stock's going to recover with that kind of news floating out there, at least for the next few days. And I like doing this kind of a trade where I'll come in and sell perhaps a spread that expires on Friday, if there's enough premium and if I can get far enough away. The closest I'd want to get on this would be this 200-day average, which is what, 16, maybe 18. So then I can come in to short-term options, start looking at 16 and 18. I don't care about the slippage. Not really. Let's go 16, 18 credit spread. Look at that. Mid price $1.55. So that means your risk is 45 cents. That's not available, everybody, unless there's doom and gloom. So you could literally, if we could get filled on it, the slippage is super wide, but if I could get filled on this short-term credit spread, selling the 16, buying the 18, this expires on Friday, and you're going to make whatever that credit is, as long as the stock is above 16 by Friday. Now it is holding firm. It may start coming back up. You just don't know. So maybe you say, well, I want to get further away, maybe 18. This is more on the gambling side of things, and I probably should shut up. But this is the world I used to trade in, and it's fun. And I would say if you like this kind of approach, then small contracts. So here we can get $1.05, $1.27, maybe. I'm gonna see what we can get. Selling the 18 calls. That means on Friday, if the stock is below 18, then we're going to capitalize on that. Whole thing will expire. And of course, you want to buy it back for 10% of your credit, all that stuff. But that's the idea. 30 cents natural, $1.15 mid. Are we going to get filled at $1.15? I don't know. Let's just do. Let's see. I'm going to do one, just for fun. So
Just for kicks and
$1.15.
grins.
Yeah, just for fits and grins. Yeah. I like going to the casino, as Matt knows, and I like gambling. It's fun. So this is like gambling, and you got to be careful and you keep your position sizes limited. But I think the probability that the stock will be below 18 between now and Friday is rather high. So why not? $1.15 credit, $1.27 credit. So the risk is going to be the distance between the strikes minus the credit. Let's see if we can get $1.27. If we do, our risk is only 73 cents, $73 per contract. Now it's down to $1.15. Let's just throw it in. I'll go for $1.20. We're probably not going to get filled. Let's see what we can get filled at. I should just stop. This is not how you want to be trading. But I think it's educationally, it's interesting because the point is when news that tanks the stock, the first half hour of the day, slippage is wide, but even if you can get filled at $1 in this case, the mark price is $1.45. It's $1.45. It's $1.10. It's $1.60. It's it's $1 somewhere, and there is the opportunity to actually get filled at a really nice price. If I can get filled at $1 on this, then my risk would be $1. 2-point spread. $1.20 is my price. Not getting filled. Let's drop it, cancel, replace the order. Let's drop it to, I'm just going to do $1. I'll take $1. That'd be great.
Mike, do you want to do an OCO on this?
Yeah, good idea. That's a really good idea. Let's do $1.10 on one. Way to go, Dean, man. This is a perfect time. This is actually a really good time to do it. So I've just clicked OCO. I've right-clicked the first order. I'm going to create a duplicate. And then what I'm going to do is put one order up here for $1.50 and another for $1.10. I want $1.10. And so I throw an order out there for the market makers to say, oh, like somebody wants to sell this for $1.50. I got one for $1.10. And sometimes it will generate a nice fill. So let's try it. $1.30. I'm asking for $1.10. Let's drop that to $1. Cancel replace order. Make that $1. Now it's starting to normalize. There, we got it.
Yay.
Got it for $1. Mid in Thinkorswim. Now, now I can't track it because the data for today is not in the software. For some reason, they didn't post any live data for today. But that'll happen once this software reposts. Then we will we'll see something. I'm going to track this just for fun. I know some of you are like me and you like trades like this, but there you go. Slippage was gargantuan, and we got filled at a nice price. You post this in here in the snipers group. And then if you like it, I paper traded. It's fun. So this is at the core of sniping is, the best place to snipe is bad news. Stocks had tanked 30%. Bad news. Now, what I don't understand is AMC's relationship with Regal and why this stock is dropping. It's probably because it's a meme stock. So you got to be careful with meme stocks. But it's just for fun. Play with it if you like it. let's just quickly run a couple of scans here. It's 8:15, gosh.
Time flies
10:15.
when you're having fun.
I
I feel
know.
like we only just got started. I'm going to sit here for the next couple of hours finding trades.
Let's cast a wide net against, the markets are coming down a little bit. Let's go after all optional stocks and indices, long-term out of the money call credit spreads. And based on the opening prices today, what's out there? And while that's running, I'm going to take a look at the markets. What are the markets doing? I'm going to go into the S&P 500, the E-minis /ES. Yeah. That's nice. That's nice.
While
Real
you're doing
nice.
that,
The rut.
I'm going to send through. Here's the winners and losers on the market thus far. And guess who's at the top of the bear list?
AMC.
Sure is.
Yeah. All right. So let's see let's come back in the software with out of the money call credits. And let's see, 82%, 17. So CRE. What's up with this one? Silver's on there, Pfizer. Yeah, that's pretty good. Regional banking. So CRE is regional banking. Slippage is a little hot, 7%. That's not bad, but 2% is better. Silver. Am I willing to jump on the silver bearish trade? No. Why not? Why don't I want to play silver right now? Anybody got any ideas? Why not silver? Hey, look, man, there's a 81% probability of profit trade on silver offering 16%. Why not silver right now?
Risk off,
Pardon?
risk off.
Boom. Yes.
Dean's all
Yeah.
over it.
Go, Dean. Dean, I remember coaching you in the beginning, and you've come a long way, man. Really, really great. Really great. Pfizer, when I taught it Optionetics, we would always say, don't do drugs. Don't do drug stocks because they can gap, and you got to be careful on those. But this one is selling at 55, which is up here. That's not bad. I mean, but drug stocks, Pfizer is a COVID vaccine company. You know, it could, COVID news. Who was it last week? The federal government, the US federal government may not buy COVID vaccines from this company. I can't remember the name of the company right now off the top of my head.
No, Novavax.
Novavax. Yeah, that's it.
It made my day on a butterfly trade.
Yeah.
I've already sent a thank you note to the White House. Perhaps they haven't got it yet.
Awesome, John. We got UNP here. Union Pacific Railroads. Yeah, this stock's not in a bearish posture. We could keep going. Disney. Dave is at Disney right now. Dave Smith. Disney's coming down a little bit at the 200. Yeah, I don't know. I'm not too excited about any of these off the top of the list. But right now, if the markets continue their slide, then bear call spreads would be great. And then what Matt's been doing, what I've been doing with these iron condors is a really good thing. Let's take another quick look at our portfolio, because one thing I do want to look at is the rut bullish. Well, it's not the rut, it's the XSP bullish broken wing butterfly, which may be losing us money. So I'm going to probably pull that one off. I mean, I'll describe what I'm talking about. Wow, it's still got money in it. That's great. So here's our rut trade, which was down. This is the bear call spread. It was down 935. Now it's down 630. And we've made money on both our broken wing butterflies. The bearish rut hedge, which is the XSP. Let's look at this one. This one's got IV in it, but you'll see that the risk graph is in a really beautiful posture at the moment. All right, so the IV is elevated, slippage is wide. By the end of the day, I would expect these colored lines to shift more further to the right. We need to start thinking about balancing this out, which we might do. We'll cover this, we'll look at this perhaps tomorrow. I want to see this thing normalize. I want slippage to normalize. Actually, slippage is good on the XSP. So here's an opportunity to start thinking about balancing this out. Given that the stock's at support at 415 on the XSP. I'm going to wait. I'm going to wait before I adjust. My prognosis is sideways to down, but we're at support. Let me show you what I mean here. XSP. You don't want to adjust too soon. Look, 415 support. Let's wait. Look at that, 415. 415, 415, 415, 415. We're at 415. Let's wait for the stock to breach 415. And then if it does, then I'll adjust. Let's just let this thing breathe. Don't over adjust. Let it breathe. Going back to the bullish one. I might just slough this one off. Okay, because we got a little bit of profit in it. And now we're going to start, theta is negative now. Tick, 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 theta, negative. Here's where theta kicks in. All right, do I close this or do I keep it open? All right, it is possible that the XSP bounces from here along with the rest of the market. That is possible. And if it does, I'll make some money, more money. If I wait a day, it's going to cost me 291. All right. So when I look at theta of 291, it's like, all right, if I wait one more day, I'll lose about 291 on theta. That's nothing. I don't care. That's good. And if the stock continues to drop $1 or $2, I'm going to lose $8.25. That's fairly neutral given that our risk is 475. So what I do on this one now is I'm going to wait. I mean, 415 could hold. It's going to cost me 291 to wait. And while I'm waiting, the stock could rise or fall. My delta is pretty nominal per dollar anyway, around 475. That's not much. And so what I do on this one is I wait. I'm going to wait to see what happens with 415. If 415 gets breached, then I'll close it off. I want this protection up here. We're still up on the hedge. And if there is a bounce, I still want to protect my potential loss in this credit spread. So adjusting is, you really got to keep your eye on the Greeks. So hopefully that made sense. My delta is pretty flat. I'm only going to lose 291 by tomorrow. What this tells me is wait another day. I can adjust tomorrow. I don't have a lot of risk here. Now I don't lose money until, down here, which is like 414, 413. So, and if this does drop, IV will rush. That's the other benefit of these bearish wings. These bearish wings on a bullish broken wing. This wing here, as the rut drops or the XSP drops, IV will rush and push these lines this way. So let's complete the delta, the Greeks prognosis. So if this stock continues to drop, my IV will rise. It already has today, but if it keeps dropping, then the IV will rush and push these lines this way. My Vega is going to make me 379 per point. So if the stock does drop $1, I lose 825, probably gain most of it back in my Vega. So even more reason to wait another day, And that's what I'm going to do here. Okay, so that's a little nuance around using the Greeks to know when to adjust. Any questions about any of that? I could keep going, but people have jobs and stuff, so Matt has to go to sleep. So does James and John. All right, I'm happy with how our portfolio is doing. We're discovering more and more ways to manage these credit spreads when they're losing. Broken wing butterflies. Don't batten down the hatches right away. And in this particular case with the rut, that's really paid off well for us. All right. Let me check chat here quickly. Let's see, there's a lot of chat here. Okay, John said something about paper trading account with IB. I found that their range of available options further out in time was limited versus toss. Okay, that's interesting. I didn't know that. I've never traded IB before. which is why I stayed with Toss for paper trading. Okay. Andrew's checked out of his hotel. Okay, we got that. Matt. All right. Matt, anything for you to wrap up for today?
No, all good. It's good to be back. I was away for a week. I missed everybody. So back into the thick of it. Thank you, everyone, for your time today. And I've had a great time. Let's get back together later on in the week and start getting into the detail of some adjustments.
Yeah, man. Tomorrow at 3 p.m. Eastern, we'll do our live hedge fund trading. And then
Oh, of course.
Wednesday at 5 p.m. Eastern, we'll have coaching on the credit spreads. So our snipers coaching. So we'll do all of that Wednesday. Have a good day, everybody. And hopefully we'll see you all tomorrow at 3 p.m. Eastern. Bye, everybody.
See you from Australia.
Yeah. Sleep well, Matt.
Thanks, brother. Bye.
Bye, everybody.